Hey, today we're going to have a good Q&A session, and these are real questions that have been asked on our YouTube channel, and I'm going to answer them right here. So I got a lot of questions that I'm staring at here. If you have questions, it might just be covered under this. So again, my name's Evan Kaufman, your VA educator. Let's get into this Q&A session that we got. So question number one that we have on this list for us. Hey, can I use my VA loan if I live in Washington State and I want to get a place in Florida, but I still have 2 years left in Washington, so no PCS orders or indication I am even moving? My guess is I'm basically can't use it until at least a year out, right? So you're ultimately moving from one state to another and you're a couple years out, but you'd like to try to buy in that other state. Is it possible to do so? It is, but there's a big asterisk on that. So one unique thing about the VA loan is it'll allow you to purchase a home in another state if you ultimately see that as a place that you're getting out to retire to, or you have a good reason to purchase that home there. And I'll give an example. We've worked with a few clients who are going overseas, and they're going overseas for generally longer orders, and they don't want it to be what's called a company. I mean, they don't want to take their family there, and they'd rather keep their family in the States. Well, you can actually buy a home in another state if you're PCSing and going out of state to another location, but your family wants to stay stateside. You can buy a home in that other state and that be okay. That can generally be a reasonable thing that the VA will accept and still approve for us to be able to do the loan. So that is one unique circumstance there. Some of the other ones too can be that if that is a place you're nearing retirement and you're looking to get out and live there, that can be something that's seen as an exemption too, as long as there's strong ties to that area. In both scenarios, actually, generally, the VA underwriters, the people who are really scrutinizing these, want to see that there has been some tie or is an extremely strong reason as to why that location is where you'll be. Now, what they're trying to prevent, of course, is if you're trying to buy it as a rental and rent it out and not even live there. So they want to make sure there's really a good reason. But so yes, it is possible to do so. But there's a lot of caveats to it, so it's one that you definitely want to have a full discussion with the VA loan originator to make sure it can work out in your situation. Second question here. My first house, the funding fee was waived. Does that mean my next loan will be waived as well, or is it a one-time use? If your VA loan funding fee was waived, I assume that most likely means you had VA disability compensation or a Purple Heart surviving spouse, one of those reasons to have that. That means all your future VA loan funding fees will be waived as well, so long as you retain that status. So, for example, the majority of folks that we work with who have VA disability compensation, every house we're helping them buy has no VA funding fee. Now, I bought a primary home in 2019 with a VA loan. We want to upgrade and also keep the 2019 home and rent it out. The new house will be our new primary residence. Will I be able to use a VA loan for it? Certainly. Yes, you definitely can. You can move to that next home and rent your old one out and use a VA loan on that next home without any issue. Now, there is a requirement the VA has you sign that you're going to occupy a home for at least 1 year after purchasing it. But there are some reasons that you can move from that home within that 1 year. And we can note on those if you want to reach out and ask. But the big things are like big life events. You got new orders that you had to move to a new location, big life change, married, kids, etc. Those can be reasons that can move within that 1 year. But as long as you've been there at least a year or longer, yeah, you can move to the next location and rent that old one out and use a VA loan on the next home and keep your old VA loan even. Does basic training tech school count as 90 days or does it have to be deployed, Guard Reserve? So your time does not have to be deployed. The one key the VA wants to see, especially for Guard Reserve, is 90 total days of active duty service. It used to be that it had to be on what's called Title 10 orders, but now it can be Title 10 or 32. The key with these, as we always say, because Guard and Reserve can be very touchy, reach out to us. Big thing that we're always going to ask for is if you have your point sheet, your retirement sheet, or any DD-214s that you might have from different orders that you had, and we'll work with the VA to get those solved for you. And so know that for Guard and Reserve, it can be a little unique. Now, basic training does not count. Tech schools generally don't, but oddly, we've seen some lately that have cleared that. I don't know if necessarily, maybe they actually weren't at tech school, and they just told us they were, but they weren't, and their COEs got clear, their certificate of eligibilities. But know that each scenario can be a little bit different and unique. The key is 90 days on active duty. It doesn't have to be deployed. Know that. So the big thing is reach out to us and we can see if we can get that working for you. Generally for Guard or Reserve, you've done what are called 6 good years, like you've done all your monthly trainings and your annuals for 6 years, that'll generally qualify you. Or if you have those 90 days that we can definitely count on Title 10 and even today now some Title 32. Now, size requirement for a home. Looking at buying land and putting a tiny home on it as my primary residence. So buying a tiny home and putting on primary residence, that kind of depends. You can do modular homes and technically put that on land as long as it has a foundation. So if the tiny home's kind of like that, then it's possible to do it. Now, no, for us, we generally don't work with modular homes and those kinds of things, so tiny houses might not work for it, but it technically is possible by the VA code and standards for it. So good question, tiny home, could it work? Well, if it's like a modular home essentially, or manufactured home, then yeah, it potentially could work. If it's a stick-built tiny home, meaning we're framing it and we're going to site it and everything and foundation, well, that just happens to be a tiny home, then yeah, as long as it appraises as a regular house, that'll work just fine as well. All right, here's a fun one. Boat. My home is going to be a ship of some sort. Can I get a VA loan to help with a home ship? Now, that one, sadly, no, we cannot use a VA loan to purchase a boat. So home boats will not work for that one. Know that the VA loan has to work for a home, and the key that they generally like to use for it is that it has a solid foundation. Boats generally don't have solid foundations. Now, if it's a house that happens to be framed and looks like a boat, that's probably fine. As long as it conforms to the area, you're probably in good shape. But yeah, no VA loans used on a boat. Now, next question for us. My credit union is offering a 5.7576 ARM versus a 7% 30-year conventional. I have a 7.625 rate currently on our home, and we've been waiting for rates to drop more. Would it make sense to refinance to the ARM? Well, for this question, because it was asked a while ago, now would definitely be a time to look at or consider refinancing. Rates are in better shape than that by far. But definitely refinancing to an ARM with a VA loan is a touchy subject. I did a video on this and I said, like, look at our ARMs or whatnot. At the time, I was back to getting lifted and stuff. Got to get that going again. But back then we were talking about ARMs and how, hey, we're not your grandpa's ARMs from before. Back in the day, ARMs used to be scary. And I agree completely. There weren't any caps on them or limits. Today, ARMs are heavily regulated. An ARM means adjustable rate mortgage. And that means, like, for example, if it's a big one that we deal with, like 5/1 ARMs. That's a very common one for us, where I say you generally get the best bang for your buck on stuff. And a 5/1 ARM means that, hey, your rate's going to be fixed for 5 years. So that's a plus. Before, it didn't have to do that. So it's actually fixed for 5 years. And then it's going to adjust once per year. And they're technically called a 5/115 ARM on our end, which means 5 years it's fixed. And then it can adjust once per year up to or down by no more than 1 percentage points. And then overall, no more change by 5 percentage points. So your rate could never go higher than 10%, for example. And it can't do that instantly. It'd have to do it over 5 years after your first 5 years. So it'd take 10 years to get to 10% in the first place. That's why these ARMs are much more regulated than pre-2008-9. You could technically have an ARM adjust from 5% to 10% immediately. Now that can't happen. So with this, though, going from a fixed loan to an ARM, you have to drop your rate on a VA loan by at least 2 percentage points if you're going from fixed to ARM. If you're going from ARM to fixed, you need no change. But from fixed to ARM, you need to go down by at least 2 percentage points. It's kind of like hedging the risk for it. The VA sees ARMs still is relatively risky, so you need to come down a lot just in case your rates drift up. I would definitely consider the ARM if I knew that I might be selling or refinancing that home within that first ARM period. So if it was a 5/1 ARM, and I know that, hey, I might sell or refinance yet again in the next 5 years, then yeah, I'd go from, in this example's sake, if I had a 7% 30-year fixed, if I could go down to, remember, it has to be 2 percentage points at least, so that 5.75 wouldn't work. If I could go from 7% to 5% on a 5/1 ARM, I'd do it knowing that, hey, in the next 5 years, I might sell or refinance this, and you could refinance it again back to fixed or change it again if you wanted to. Your risk is very limited in that scenario. But if I think it's a 5/1 ARM and I know I'm going to keep this home for another 20 years, that's a little bit of a toss-up. There's a good chance that you'd probably be able to do another refinance down the road to save it, but it does add a little bit of a risk profile to the situation. So good question. In your case, you would technically got to wait till you at least get that 2% drop if you wanted to go from conventional to ARM. So I definitely wait for a little bit longer to have that fully make sense. Now, only expensive homes accept VA loans because the VA is so picky. So in the end, it is out of reach for many veterans unless they are retired senior officers. That was more of a statement than a question, I guess I should say, which I just got to say, no way at all. We've done VA loans down at $70,000, $80,000 VA loans up to $2 million VA loans without any issue, and they've worked out very well. Not picky at all. Generally, what people refer to as picky for a VA loan is when the VA appraisal is done, and if they see there needs to be certain changes from minimum property requirements. The VA is effectively trying to make sure the property is safe and meets basic standards. No peeling paint, all the doors open, your egress windows are okay. Just know that the quality of that review sometimes can vary quite a bit, but there's nothing wrong with that whatsoever, and that's generally not overly picky, and they're generally things sometimes that are caught also. If you went with a conventional loan, they're caught there as well. The VA loan is over 80 years old. it's changed over the decades significantly. The VA loan today is much more fluid. I would argue it's simpler in most cases than conventional loans even, because it's changed over time. Now, just 10, 20 years ago, that wasn't always the case. But today, with a lot of changes that have happened, the VA loan is better than it's ever been before. And let's knock on wood, hope that continues to improve. So no, not out of the reach, I would say, of anyone at all. We help brand new enlisted out of school to get prepared for their VA loan. And of course, we help retirees, senior officers too, but we've helped them all one and the same, and it works well. Last question, how do I contact you? I feel like maybe the marketing staff put that one in, but it probably actually has been asked too. You see, if you're watching on YouTube right now, you'll see that down in the comments all over the place. If not, WeVett.com. Very simple. You reach out. You're going to get myself, my team, Spencer, Alec. We'll make sure we get you taken care of. But you can reach out at WeVett.com. My email is evan@WeVett.com as well. Feel free to email anytime. Thanks for letting me do this brief Q&A. These are real questions that we've got from folks. Love answering it. Feel free to keep piling more into our YouTube comments, and we'll make sure we get to them. My name is Evan Kaufman, your VA loan educator. Take care.